Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 912A, and today's date is March 7th, 2016, and the title of the episode is Russia is Strategically Maneuvering to Control the Global Oil Supply to Bypass the U.S. Dollar. Let's get right into the economic collapse financial news. Now, we've been hearing a lot about getting rid of cash. We understand Europe, Japan, even the United States, they've been talking about going to negative interest rates. Even though the central bank, the Fed, came out and raised the interest rates by 25 basis points, right after that occurred, we've been hearing negative interest rates. And we've been hearing about a cashless society, how Larry Summers came out and said we should really get rid of the $100 bill. In Europe, they said they can get rid of the $500 euro note. And we see out in Greece, as soon as this was announced, the people in Greece got very nervous, and they took their 500 euro note and they deposited it back into the banks because they were nervous it was going to be worthless. And what's on the drawing board right now is that Greek banks, they might charge those people who want to deposit the 500 euro note into the bank a fee, and this way help them prop up the system a little bit, help them pay down certain things, because they realize a lot of Greek people withdrew their money, and we see at this point they have an opportunity to tax the people. Now, they haven't done it yet, but they're considering it. And we'll have to watch that situation very carefully. Now, out in Australia, things are declining rapidly there. We know that retail has been good, housing has been good, the economy has been good, but everything's starting to decline now, just like we saw in Canada. Canada is a complete mess at this point, and it's going down the tubes, just like every other country. And retailers are already in Australia have been warned to prepare for at least 2 years. And every time they say just 2, you know it's going to be much, much longer. 2 years of subdued sales growth as declining per capita incomes, softening housing prices, and weak commodity prices. Real retail sales growth is expected to slow significantly in 2016, 2017, leading into 2018. This is coming from Deloitte Access Economics. And they're saying that what they're seeing right now, things are going to really slow down. Now, we're seeing this happen here in the United States. We're seeing it in Canada. We're seeing it throughout Europe. And it is spreading right now. Because what's happening is the unemployment rates are really going up. People are losing their jobs, and the jobs that they are finding, they're only part-time. So what's happening at this point is that a lot of people don't have discretionary funds. They can't go out and pay for the goods. And we're starting to see this spread throughout the world at this point. Now, here in the U.S., consumer credit growth, revolving credit, is way down. People are at their maximum. And what they're seeing right now is they thought credit was going to basically expand by 17 billion. But it only grew by 10.5 billion. The weakest and biggest miss since March of 2013. And the biggest driver of this disappointment was contraction in revolving credit, down 1.1 billion. This shows us that people, they have nothing left here. We're running on empty. And as we move forward into this year, more and more people are going to be laid off. We're going to see more retail stores close as retail declines. And the situation is not going to get any better. Actually, it's going to get much, much worse. We're seeing the Baltic Dry Index is holding steady at 354 points right now. Very, very low. This is absolutely in a range where it's completely awful. Now, Peter Schiff came out and he's discussing the economy. And he's saying that the new bubble that we have right now is much larger than the 2007-2008, and it is slowly leaking right now. He said the U.S. is already back in a recession, and stocks are in a bear market. The bubble is now releasing air. NERP is a complete disaster. And as we move forward, we're seeing that jobs are absolutely non-existent. 90% of the jobs created were part-time jobs. 80% of the jobs were in low-wage sectors. Hours worked and wages down. Biggest drop in weekly earnings in U.S. history, down 0.7%, and 4.9% unemployment rate means U.S. creating low-paying part-time jobs. Working-age people have accepted bad jobs or have completely left the labor force. The real estate bubble right now is getting ready to pop, and the economy is going to be heading down the tubes. And this is what we've been seeing. This is what we've been reporting on. And as we move forward, we're starting to see that everything is coming together at this point. All sectors of the economy are breaking down. Nothing is improving. The only thing that is improving at this point is the government creating illusionary statistical numbers, trying to convince everyone that everything is fine. And they're having a very difficult time keeping the market up and gold suppressed. Because as of December of 2015, gold has gone up 200 plus points already. And we can see already the Bank of International Settlement has issued a warning to all central banks, saying the negative interest rate risk is backfiring. The longer and more deeply central banks in Europe and Japan venture into this unconventional monetary policy, it's going to get worse, and we're going to have major problems. And of course, as we know, the central banks are not going to do anything about it because they need to stay on this path, because if interest rates rise, if they stop the money printing, if they stop everything they're doing, the entire system collapses, and they do not want to be blamed for any of this. Absolutely not. And as we go on throughout this year, the central bank, the U.S. government, they need to prop this entire system up, one way or another. They cannot let it collapse whatsoever, because they want to bring it down themselves. They want everyone to look over to their right at this other group, at this other country, and blame them. Now, Russia is doing something very interesting. They have played a master stroke in the current oil crisis by taking the lead, and they're forming a new cartel. Remember, they had a meeting with Qatar, Saudi Arabia, Venezuela back on February 16th. This was the first step. During the next meeting in this month, they're going to have another meeting in March, and they're going to have a larger group of participants. They are building a consensus to basically form this new oil cartel. So they're taking the OPEC nations and they're trying to create, ROPEC, which is Russia and OPEC. And we're starting to see that Saudi Arabia has been a long-time U.S. ally, but they might be looking at Russia saying, maybe we should be moving towards what Russia is doing. We see Iraq is looking at Russia, and many other countries are also doing the same thing. So if they can get this consensus of all these countries together, Russia will emerge as the de facto leader of the major oil producing nations of the world, accounting for almost 73% of the global oil supply. And what they're going to do, once they capture the oil market, they'll be able to control it, and they're going to bypass the dollar. They won't even need the petrodollar. And what does this mean? This means if the Middle Eastern countries who are selling their oil using the petrodollar, when they stop doing this, a lot of them have, these dollars will float back to the U.S. because countries will not need to keep dollars in their reserves. And that's where we're going to get hyperinflation, because as more dollars come back to the U.S., there's more in circulation, which devalues the dollar. And the petrodollar is basically what's propping this whole system up. And Russia might say, okay, we can use the yuan, we can use the ruble, or just use your own currency. And this is going to be a reality sooner than later. Now, we know the U.S. government right now is, and the central bank is not going to let this happen, because if it does happen, everyone's going to turn towards them and say, wait a minute, you just destroyed the economy. We're blaming you. The economy is weak. We're in a recession. The entire system just collapsed. This is all your fault. Because back in 1971, we came off the gold standard, and you said we should be on the petrodollar system. Well, they didn't tell anyone. They just did it. And we see this was the central bank using the excuse back in the 70s of gold speculators. And I don't know if people remember this, but they told us there was an oil shortage while they're making the transition. And it was very difficult to get that oil at that time. I mean, gas for the car, I should say. And at that point, you had odd and even days, which was the last digit of your license plate, or you had red and green flags of those gas stations that had fuel, and there were long lines. All of that was a complete lie. And people are going to turn and say, you know something? You put us in this position. And we are headed in that direction. And this entire scenario is accelerating faster and faster as we move throughout this year. And this is why everyone at this point needs to be prepared. You need to be ready. You need to have food. You need to have a weapon. You need to have toiletries. You need to have water. Whatever you're doing, keep doing. If you haven't started, you can use lifereliance.com. They have bug out bags, water filtration systems. You can customize your orders. But whatever you're doing, continually prepare. Continually to purchase the food, the water. Because you do not want to be in that situation where everything all of a sudden starts crashing. Prices start to skyrocket. People run all over the place and they try to get the supplies. But you know what happens when there's a storm. And it's coming. And people wait for the last minute. Everyone makes a run on the supermarket and the shelves are completely empty. The same thing is going to happen, but this time it's not a storm. This time it's a collapse of the system. This time the credit markets are going to freeze up. This time we're going to see inflation. This time we're going to see riots. This time it's going to be a lot worse. And this is why everyone needs to be ready for what is coming and be prepared to weather this storm. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.